Cathie Wood is a name that connotes boldness and accomplishment in the world of business and investing. Her recent acquisition of a sizable number of Tesla shares, her third in as many months, is not an anomaly. In light of Elon Musk's Twitter antics, investors have been concerned about Tesla's stock price fluctuations in the wake of a challenging 2022. This Wall Street Gains video explores why Cathie Wood took advantage of this opportunity and what it means for Tesla's future. Let's get started. Buckle up, hit the like button, and discuss Tesla's influence on the conventional auto business, as well as how they stay one step ahead of the competition. The well-known investor Cathie Wood took a risk when she grabbed a sizable portion of Tesla shares for the third time in as many months. Over $11.7 million worth of shares were acquired by her ARK investment fund from 3 different exchange-traded funds. This occurs during a period when Tesla stock has had notable ups and downs in recent weeks after a challenging 2022 that alarmed investors because to Elon Musk's antics on Twitter in an exclusive interview. Cathie dubbed Musk Tesla's Renaissance man, alluded to a competitive advantage for the corporation. In Wood's future, the price of Tesla stock will have risen to a point where ordinary investors cannot afford it. A Renaissance man is a person who is knowledgeable about a wide range of subjects, including science, philosophy, literature, and the arts. The European Renaissance, which spanned the 14th through the 17th century, placed a strong focus on education and learning in a variety of fields. During this time, a number of well-known individuals who represented this concept came to prominence. Elon Musk, on the other hand, is well known for his diverse interests and career highlights in a number of areas. For example, prior to founding Tesla, a business that has completely transformed the electronic vehicle market, he co-founded PayPal, a very successful online payment system. In addition, he launched the digging company that is creating subterranean transportation systems, and SpaceX, a private space exploration company. Additionally, Musk has continuously shown that he is eager to take on challenging initiatives and think creatively. For instance, he has already sent many spacecraft to the Red Planet in preparation for his goal of colonizing Mars. In addition to all of that, he has developed a test track for the technology and proposed the Hyperloop, a mode of transportation that would let people to travel in pods via low pressure tubes at fast speeds. After Tesla's recent slump to its lowest level in more than 2 years, his innovative ideas and lofty aims continue to excite many people around the world. Overall, his broad interests and accomplishments make him a modern-day Renaissance man. For the third time since October, famous investor Cathie Wood has taken control of a substantial chunk of Tesla stock. It's important to remember that at the time Cathie Wood made her purchase, Tesla's stock had dropped by over 19 in December and by about 55 on an annual basis. Additionally, ARK lost 64% in 2022 and more than 13 shares in that month, based on an email delivered daily transaction report. For an estimated $11.07 million, Cathie Wood's ARK Invest bought 74,862 shares of the electric vehicle manufacturer among her 3 exchange-traded funds. For Zoom and Amazon for Cathie, Tesla is our 3rd largest stakeholder in its financial product line. In just 16 years, Tesla has emerged as the greatest competitor to established automakers' vehicles. Elon Musk, the colorful and often erratic inventor behind Tesla LED, has upended the century-old auto industry. While Tesla operates with agility and creativity, traditional auto companies are finding it difficult to stay relevant in a world that is more focused on software. Their size and bureaucratic structure also cause them to be reluctant to adapt to client requests. These businesses have a distinct culture from software companies and rely on lending money to customers to increase sales. Rather than being a traditional carmaker, Tesla's rate of innovation in the high-end vehicle sector is more akin to tech titans like Google and Amazon. Its remarkable market valuation serves as a warning to other automakers that in order to stay competitive and relevant in the market, they too must create creative business models akin to Tesla's, while acknowledging that other automakers like VW and BMW have made notable advancements recently. Cathie said that Tesla still outperforms in terms of power and range. Tesla's inventive electric cars and state-of-the-art technology have upended the established auto industry. When it comes to electric cars, Tesla has a distinct advantage. They were among the first manufacturers to provide fashionable and useful long-range electric cars, And they kept setting the standard for range and battery technology when compared to other automakers. While other automakers are also investing in electric vehicles and autonomous driving, Tesla has been making large bets on the technology that might revolutionize the automotive industry. Because of their concentration on these aspects, Tesla has been able to develop more quickly and nimbly. Yet competition in the electric vehicle with the help of businesses like Ford, the market is growing. Volkswagen and General Motors are working harder to build electric cars. By 2025, Ford plans to have invested more than $22 billion in electric and driverless vehicles. The Mustang Mach-E, the company's first all-electric car, was introduced in 2020. Ford has also declared that it will launch an electric variant of its well-liked Explorer SUV, an electric transit car, and an electric F-150 pickup truck. By 2025, DM wants to have 30 electrified vehicles available worldwide, with 2/3 advertised and sold in North America. The Chevrolet Bolt, the brand's first all-electric car, was introduced in 2016. Additionally, GM has revealed that it will launch an electric Hummer pickup truck, an electric Silverado pickup truck, and an electric Cadillac Savvy by 2025. Volkswagen wants to sell 1 million electrified cars a year. The ID.3, the company's first all-electric car, was introduced in 2020. Volkswagen has also declared that it will launch an electric ID.4 SUV, an electric microbus, and an electric version of its well-liked Golf hatchback. For many years, Toyota has led the industry in hybrid cars, but it is currently increasing the number of electric vehicles it offers. Toyota has revealed plans to launch an electric variant of the well-liked RAV4 SUV, an electric Lexus luxury brand, and electric Land Cruiser. In 2010, Nissan became one of the first big automakers to introduce the Nissan Leaf, an all-electric automobile. Since then, the business has introduced a second generation of Leafs with an enhanced feature set. Additionally, Nissan has stated that it intends to launch an electric variant of both its premium brand Infiniti and its well-liked Rogue SUV. Based on Woods, unless other automakers choose to incur losses on their vehicles, they will not be able to match or compete with Tesla's combination. In today's software-centric environment, Tesla has a big advantage over traditional automakers, and this is mainly responsible for its success. These established businesses are hindered by their size, red tape, and slow response times to client demands. A different culture than a software firm and a reliance on client finance to fuel sales development. Because of this, the top automakers acknowledge Tesla as a formidable rival. The founder and CEO of Cathie believes that one of the main factors influencing Tesla's future success will be its potential new revenue stream from autonomous taxis. More than half of their projected EBITDA and 60 of for anticipated value in 2026 will come from autonomous taxis. Even if in 2026 the company's revenue would come from electric vehicles 50/70, their margins will be significantly lower than those of robotaxis. 4 years later than Musk originally predicted, Tesla estimates that the autonomous ride-hailing service will begin in 2026 due to growing confidence in its self-driving capabilities. An industry that has existed for more than a century has been upended by Tesla's success. Cathie would voice her worries about Elon Musk's overuse of Twitter when questioned about his leadership at Tesla, a move that has alarmed some investors. It is anticipated by investors that Tesla might start providing autonomous ride services for a fee as early as 2024. The updated model is expected to increase Tesla's capital efficiency even more, costing between $6,000 and $8,000 for each extra unit of capacity by 2025, compared to the prediction from the previous year, which stated that the business would need to spend about $80,000 to upgrade the Model 3 by 2026. This is a major improvement based on ARK's bear and bull case scenarios. It is anticipated that Tesla will pay between $2,000 and $7,000 for each increased capacity unit. Based on the company's recent model updates, Tesla stock may be worth between $2,900 and $58,800 in 2026. However, if this happens, only wealthy investors will be able to own Tesla stock, keeping it out of reach for the typical American, according to Elon Musk. Owners of Tesla cars will be able to include their cars in the ride-sharing network, and the business would charge a commission for each journey. He anticipates the service to launch as early as 2021, though it's unclear if the business will be able to fulfill this aggressive schedule. Some, on the other hand, are more negative and fear that the business won't live up to its potential and will just end up being another production company. The average 12-month price objective for Tesla on NASDAQ is $302.5, which is about twice the company's present worth. Tesla stock price projections indicate a wide variation. The most optimistic analysts covering Tesla predicted that the stock would rise to $760 in a year, while the most pessimistic expert predicted that it would fall to $73. The opinions of investors on Tesla's short-term prospects differ significantly. For example, Cathie Wood thinks that the recent drop in Tesla stock is a great time to make an investment. She is bullish on Tesla and thinks the company has a big advantage over rival automakers, even though some investors are worried about Twitter diversion. For the third time since October, Wood's ARK investment has taken control of a sizable portion of Tesla stock, demonstrating her ongoing excitement about the company's prospects. This brings an end to the video. So please remember to subscribe and give it a huge thumbs up. We appreciate your time, and we'll see you in the upcoming video.